on Thursday, August 13th. And with that, I'll call the meeting to order. Liam, I don't know if you've got any instructions for the members that are in the audience about if they want to raise their hand or communicate with us, how would they do so? Or Tom, you've been to this rodeo a couple of times. I don't know.
Yeah, I'll do it. The only attendee right now is our cable guy. So, but certainly anyone could raise their hand. There is a spot on the agenda, item 5 for public comment. So Chairman Hayes will indicate at that point when people, public comment will be received, raise your hand and we'll invite you in and allow you to make your comment audio only.
So with that, I'd like to call the meeting to order. And with that, we'll make a note of who's present, and all the committee members are present, or along with Ruth Porter, Liam Gallagher, Tom Hall, and a guest panelist, Don Hamill. We have item 3, which is the approval of the minutes. For some reason, I couldn't access them today, but Betsy,
Yeah.
Did you get the minutes, or did you get a chance to see the minutes and review them? And if you are, do you have a motion to approve them? Or should we table the minutes? We'll come back to them.
I think you should table them. I couldn't find them myself, so I suspect they were not available. So,
okay, let's table them.
Betsy, you're on mute.
So with that, I apologize. We do have a pretty long, a lot of agenda items. Hopefully we can kind of move through them quickly. I think the first agenda item, which was really kind of one of our council goals, was to kind of quarterly review the statements. This is an early draft of the year-end financial statements. And I know Tom and Ruth are here. They usually prepare for us an executive summary, which was part of the package. And with that, I had some questions on them today. I know some others may have had some questions. So Ruth, I don't know if you want to kind of walk us through your executive summary or just the highlights, telling us things that we might want to know, and then we can kind of have float any questions from there.
would it be helpful for Liam to share a screen and bring that up, or
Sure,
or
yeah,
not?
if you
Okay.
could. Sure, absolutely.
All right.
Ruth, why don't you start in?
So as of the end of June 30th, we've gone through quite a COVID-19 session in this past quarter, with staff, part-time staff being partly laid off, and then full-time staff going down to 20 hours for a short period of time. We are, as of July, as of today, the full-time staff are back, and I think some of the part-timers are also back. In terms of where we are for the end of the quarter and the end of the year, we issued this past year in May a $7 million bond to cover some of our capital items. And then we were notified by our municipal advisor that the timing was pretty good for us to refund or advance refund some of our current bonds. So we did that. We advance refunded our 2010 through 2013 bonds. The total we refunded was about $43,355,000, and we reissued $42,315,000. So we saved about $1 million in principal payments, and over the life of the bonds, we will have also saved an additional $2.4 million in interest costs. So, I think that was a pretty good process for us to go to. It was pretty hectic, but I think we kind of made it through there okay. I think overall the town has done pretty well in terms of our, because of some of the reductions that we did with the furloughing of staff and the part-timers, and Tom had instituted a curtailment order. The town is right now at about 93% of budget, and we're about 93% in terms of revenues collected. So we're right about even revenues and expenditures. When we were closed for a couple of months, folks couldn't register their vehicles. So the revenue staff downstairs essentially came in and worked almost nonstop registering vehicles for folks. And since it's the second largest revenue source for the town, we really wanted to make sure that our revenues were accurately reported within each fiscal year. So we kind of tracked all of the excise revenues that we collected in July that really pertain to the prior year. And we are booking those revenues. So that turned out to be about I don't know if I wrote it in. I think it ended up being about 117,000. In terms of where we stood at June 30th, we actually received the actual amount we budgeted, plus we made an additional 55,000 more. So I think overall for our excise collections, we did pretty well, in spite of all of the COVID-19 conditions. Building permits exceeded their estimates by 33,000. Plumbing and electrical also did. Parking violation revenues are also up. We also received more state revenue sharing than what we had originally budgeted by about $130,000. I'm not sure that we will see that again next year. However, those funds are only used to reduce the property tax. So those monies will help to reduce FY21's property taxes. Tax collections through June 30th are at 98.9%. So, that's a pretty good collection rate. As of July 31st, we were at 99.2%. So Texas did very well also. So I did want to thank Larissa, our former assistant town manager, as she was very helpful in organizing the citizens in terms of when they came in. Plus, she took quite a few who were unfamiliar with the rapid renewal excise process and helped them to register their vehicles online. So that was very helpful to the finance staff working on those.
Just if I could, just as a footnote, several years ago, we put a couple of kiosks, workstations up in the excise revenue office. And the hope and intent was that folks coming in to do their business, standing in line, could just hop on a terminal and do their business. It did not take off. What I guess I learned with this experience this spring is it would be great if we could have someone, and it might be an existing staff member, I'm not suggesting a new staff member, but someone to kind of work that line and to assist people. It's remarkable. People are surprised how easy it is. And, we would love to train as many people to do things online as possible. It's better and easier for them, and it's easier on staff as well. So that's something we're going to think about and find a way to rotate people as our time permits out to work the crowds and help them to do things online so they can do it in the future as well.
Plus, it's safer for them if they're not here doing their registrations. Let's see, so where else? The town has a fund balance policy, and the goal is to maintain fund balance equal to 10% of the prior year operating budget. So for the FY20 budget, the goal was 8.8 million. So for FY21, it should be 9.4 million. So I think we're probably not going to make that this year, but our goal is to try and get to that point. So some of the negative indicators that we have, because of the whole COVID situation, community services had to essentially cancel many of their summer programs, which meant that on one hand, we had some savings in expenditures, but it also meant that we had some lost revenues, and our lost revenues were about $800,000. So that was a pretty big hit. They anticipate we can do summer programs this coming year, that we will make some of that up. And then the general assistance costs were overspent by about 60,000. We did anticipate having some revenues come in, and they are coming in. We're missing right now May and June's revenues, so the deficit there probably won't be as large as what it shows here. I know that was one of the questions Councillor Hayes had, and we're about 60,000 overspent. Right now, we're over collected because we didn't estimate as many revenues by about 23,000, and we still need to collect May and June's revenues. So, and I'm not sure what that number is. I did have a call into the general assistance person, but I haven't heard back from him yet. So,
Yeah, and I just, oh, I'm sorry, go ahead, John.
Is it a straight percentage that we're reimbursed for general assistance?
there are two percentages based on certain factors. I don't really remember what the percentages were.
John, I can answer that. The town of Scarborough receives a 70% reimbursement from the state on our GA expenditures, which is related to the performance and audits. And so if you're essentially in good standing and compliant, you're eligible for that increased percentage, and that's what Scarborough has historically been eligible for.
Okay. Thank you.
So, yes, I just wanted to clear. So I think in the detail you provided to that, trying to understand that, we had budgeted for the year about a net cost of $33,600. Is that right? Is that where we thought we were going to be net in the budget?
No, net would have been, the budget was 33.6 and we estimated revenues of 11.690. So the difference between those two would have been about 22,000 maybe. The net would have been 22.
So we thought the net was going to be 22, and what you've responded without the receipts for May and June, our net's about 59, right?
Correct.
At this point. So it's really, it's a delta of about what, 37,000?
37, plus less the whatever we get for May and June.
Okay. All right. And what do we budget? Are we going to be okay next year in the budget, Tom, you think, and what we budgeted?
I think so. We did have some unique, unexpected experience in FY20, and that's, what you're seeing, the effect of it there. Yeah. I do believe we took that into account in FY21 and have carried forward what we know. So I don't expect there'll be this great a variance. Okay. Scarborough historically has been shockingly low in this regard, comparatively, for reasons I can't quite explain, to be honest. But but having said that, a couple of families can move to different community, or their situation changes and they come off the general assistance rolls as well. Okay. So it's a bit hard to predict, but I think we did learn from FY20 and are appropriately budgeted in 21. Okay,
thank you.
Mm-hmm.
So we've estimated for FY21 approximately $86,000 for general assistance this year. That's the straight expenditures. It doesn't include any revenues.
Yeah, so, sorry, I mean this is just one subject I probably can speak to. And I think that through the budget process, we commented on, I think the budget itself went up a few 100%, trying to capture and account for what that updated experience is. So.
Yeah, I remember that conversation. So, okay, great. Thank you.
The other two areas where we had some over expenditures had to do with legal and employer insurances. And the legal was over expended by about 207,000, and the overall total employer insurances was over by about we spent 813,000, and we budgeted less than that. So about 100 and something thousand less than that. And most of that had to do, the over expenditure of about 100 and something thousand had to do mostly with workers' compensation.
I can also speak to legal. We did have some unique experience, a fair amount of it. Well, I should say I do have an accounting from Bernstein Shore, our primary attorneys. On occasion, particularly for Board of Assessment Review, we do use outside counsel if there's a conflict, and there have been a number of big cases. So included in that overage is expenses beyond Bernstein Shore, but at least from Bernstein Shore's involvement, the sorts of things we have experienced this past year is about $100,000 in costs related to the final closeout of the Petron case. That was the tax appeal lawsuit. The lion's share of that 100 is related to the Piper Shores exemption matter, which has been resolved. We also had a fair amount of ordinance development costs. The marijuana ordinances involved a lot of legal support. And that's kind of unique in that regard. I did note in the accounting here, there'll be some reimbursements that will offset this. The Bessie TIF, you're seeing all the expenses related to that. Our legal expenses will be covered by the applicant. So we'll get reimbursement for that. And Ruth, I noticed the general obligation bond related matter. I want to make sure that wasn't covered through cost of issuance in some other way. So there'll be some adjustments here.
Tom, will those adjustments flow into this fiscal year, or will they flow into next year's budget?
No, we'll make the adjustments back in FY20 to make sure that they properly reflect.
If we know what the Bessie TIF reimbursement amount is, we can book that as a receivable back to last year.
Okay.
And in terms of the bond costs, yes, those usually show up under the debt service budgets.
So just as a quick question of which I deciphered some of it from the questions, but so where do we think, as we sit today in these financial statements in front of us, where did the municipal budget end up as a surplus or deficit, and where did the school budget? I think you said the school budget ended up with a net surplus or fund balance of 1.5 million. Is that right?
That's what we're showing. Well, that's what I'm showing right now. I know that Kate, like myself, we're both still working through year-end processes. So depending on where they are with their revenues, I know some of their revenues were short. I'm not sure if those are gonna be made up or not. But I also know she's still working through some of her wage accruals and benefit accruals. So those will reduce that number.
Yeah, I would also note, item later on your agenda, the COVID funding for schools. I was looking through some of that material. Costs are eligible starting in March of 2020. So presumably there are costs that are being shown in their year-end figures that they may be able to seek reimbursement for. The other critical thing about that funding is it must be spent by the end of December this year. So I suspect, or if I was them, I would be looking to book some of those eligible expenses back to last year to make sure I maximize and use as much of that award as possible. So I think on the school side, there'll be some things in flux because of that.
So do we know where the town ended up on these financial statements, just from revenues versus expenses? Because Tom, I think you were anticipating a pretty sizable surplus that you rolled back into the budget for next year. I just wanted to make sure we're on track for what you thought you were going to have versus where we landed.
Yeah, as I recall, and forgive me, I didn't educate myself on this. Initially, I think I was looking at about a $700,000 year-end fund balance.
Yeah.
In the end, we brought that back to 400.
Yeah.
Where we ended.
Yeah.
I'll let Ruth speak to where we are and what needs to be done to finalize that number, I guess.
Are we close? I guess that's my question. Are we close to what you anticipated?
Yeah, I think we will be close. There are quite a few inter-fund adjustments that have not been, that aren't reflected here. Those will be coming as we get into the other funds, as we try to close those out on June 30th, for June 30th. So for example, I'm showing for the general fund, the town, we're, as of July 31st, when we ran these reports, we had spent $39.5 million, and we only collected about $37.4 million. However, there's about $3 million worth of other financing sources that we need to still record. So I think that will help offset that, what looks like a pretty big difference between actual revenues and actual expenditures.
Peter, let me say
So-
this. I'm glad we downgraded that in the kind of the final hours of the budget process. I don't think we would have reached the 7, but I hear what Ruth's saying, but based on our revenues and expenditures experience, I think we're going to make budget in that regard.
And just, and I don't know how John or Betsy feels, but for future presentations of the financial statements for us, is there a way that's really easy for us to kind of ascertain, just quickly look at it, where we think we're landing for both the municipal and school budget as we typically look at it? What did we anticipate for revenues? What did we anticipate for expenses? And where are we? I just had a hard time teasing out those numbers. I don't know if John and Betsy did.
Yeah, so I think what you're suggesting is just add a budget column.
Yeah.
Yeah, I would support that. I think it makes sense.
Ruth, do you understand the request and can we accommodate?
So what we're really looking at is we have the appropriations and the expenditures. You're looking for a balance column for revenues and expenditures, and then just a quick summary of actual revenues to actual expenditures.
Yeah. Just so we know how we're tracking. So when Tom says 700 or 400, we can quickly look, future finance committee members can look at it and just say, yeah, we're in good shape.
Mhm.
And then the only other thing that I had, just to kind of follow up to the later conversation on the unaudited school fund balance, and I apologize to the audience because this was in a subsequent summary or reconciliation. I thought after they took $700,000 that they were going to apply to 21, that they didn't have a lot of surplus left. But this, again, I understand there's a lot of adjustments, but the number of net of 1.5, that's larger than we thought, isn't it? When we were having the budget conversations? Or am I interpreting that
No,
incorrectly?
my recollection, Peter, is Kate was very concerned about any conversation around this, but she had numbers approaching 2 million, as I recall. And she, of course, qualified it 6 ways to Sunday. But I'm not surprised to see this number because I recall her projecting something even higher than that. They were able to garner some pretty significant savings in operations and transportation and food service. So they were able to book some pretty good savings as a result of their closure all spring.
They weren't able to actually save too much in food service costs. They're actually trying to, because they continued to pay their staff even, and they had food meals prepared. So they're looking at, but they didn't get any revenues in. So they're looking at about a $459,000
I beg your pardon. Yeah.
deficit for food services, and then a smaller, about $12,000 deficit for adult ed that the school's general fund will have to make up. And I've already taken those into account because at one point I originally had an audited net of about a $2.1 million. So with those adjustments, and it was less than that, but so they're at about a 1.4.
Right. So, but you've already accounted for the set. I know we had lots of conversations. You've already applied the 700 they were going to use
Correct.
to this. And this would suggest before and understood there's going to be adjustments, but there's an additional 1.5
Right.
potentially.
Potentially, unless there's something that I'm missing.
Yeah,
And
okay. So those would just be helpful sort of numbers for us just to see as we go through it. So Betsy and John, do you have any questions on the financial statements and comments or clarifications?
On the page that you just had up, Ruth, you showed this school special revenue fund that had nothing budgeted, but had a little over $500,000 in it. What goes into that fund? The 531,388. Under other school fund revenues and then fund
Okay.
72XX.
So what that is, yep, right there. The other school fund revenues. Oh, the 531, that's like local entitlement or Title I, Title II, some of the schools' federal programs.
Okay.
And that's what they spent. And hopefully there are, that's what they've received, but hopefully up under other school fund expenditures are where the expenditures are.
Betsy or John or Don, do you have any questions?
I'm sorry, can you back up a second, Peter, to what you asked for the budget column? And can you show that again? And can you just explain to me one more time what you were going to add based on that request?
Maybe Ruth, you can go back.
Well, if you stay on the screen, Liam, if you can
Yeah.
stay on the screen, what this screen kind of shows for the funds, we could kind of do for the town and the school. Right now, all we show on the town and school is the revised, the expended, and I think the percentage. But we
Okay.
can add the available budget or a net budget column in there for the school and town, and then maybe below that show something that says, here's your actual revenues, here's your actual expenditures. This is-
Okay, great. Yeah, that's what I thought. So it's kind of more like this layout, right?
Right.
Okay, thank you.
Yeah, Betsy, I think it was just trying to get for us to be able to very quickly look at this page and just say, you know, what is for the town, the difference between revenues and budget, and do we have a surplus or deficit? So we kind of can monitor that, and the same with the school.
Right. Yeah, and I think we've talked about it before, right? So it'll be a good thing for FY21 going forward. That would be helpful. Thank you.
We can do that.
Don, did I see your hand up?
Yeah, I had, if I may, I had a couple of things, a couple of comments and then just a quick question or two. But
Yep.
I wanted to thank, Tom and staff, for their efforts and congratulate them for the performance on collections. You referenced the numbers for tax collections and excise taxes. Those are impressive. And I know that stuff really doesn't happen by itself. I witnessed the staff assisting people when they were standing in line to pay excise taxes. And I have to say, Larissa was very effective. So I know that doesn't happen by itself. But thanks to you for that. But I had two quick questions. One, that really are kind of, one process, one kind of forward looking. The process question is, this is great to see the financials for the full year, but is there a way for us to try to make this more, and this is a question for the committee and also for the council, to make it more of a recurring process rather than ad hoc? I know we've worked really hard to try to build this into something that's just a recurring automatic thing, reviewing financials. But is there some way we could try to work on that moving forward to just make sure it happens, rather than us having to chase it, as a committee and a council? So there's that, that question I would just ask. So.
Don, I would say from a committee's perspective, I think we've fallen into a fairly regular routine in that regard. I think what we have not been able to do is to meet the council's goal this year, which is to broaden the audience, to do that with a full council.
Yeah.
And, it does occur to me that this presentation is hard to get through, and I fear some challenges doing it that larger platform. So, we're wide open to suggestions as to how to simplify the information to make sure people are able to get what they're interested in.
Yeah.
And that's a real challenge.
That's a fair point, Tom. That's a fair point. I appreciate the feedback. One thing I'd suggest, I know, and Peter, knows this full well, we have in the past we tried to use this dashboard or something that would be more of kind of like a flash report, a one pager. So, maybe there's something like that. I know it's more work that, it's not going to put itself together, but that's something I think would be very helpful, because it would be good to get the council in the rhythm, better in the rhythm with the finance committee on this, particularly as we have things that are going to continue to come over the transom for us. But thanks. A good idea. Thank you.
Yeah, and maybe Don, leave it to Ruth and Tom, Liam to think about, to get to your point. Maybe we should just have a certain interval after the quarter end, that there's a date certain that at least some draft of the financials are available, that maybe there's an easy summary, or at least the executive summary is pretty easy to digest. Kind of the way we try to set it up is, here's the positives, here's negatives. So maybe if we could ask, the team to kind of, what would they be comfortable to committing to after quarter end to get some of that information out? So at least we've got 4 sorts of markers in the calendar, if that makes any sense. I don't know how John feel about that. Does that make any sense?
So in terms of like the one pager that Don was talking about, I think that's a great idea. Just so that it's easy for the council to consume. Yeah, we met our budget and school met their budget or didn't. And these are the high level things that were off. In terms of the frequency, yeah, I mean, I know Ruth publishes this quarterly and has for quite some time. I don't know that it's always with the same cadence. So that's something that I think I would support working towards. What I don't fully understand is these are unaudited and still in process. So I don't know how much they change from here over the next month. So that's, I guess, a question mark for me that you might want to think about before you formally publish them.
Yeah, Peter, you'll recall this, I think, because you've got the longest time. It occurs to me you served finance every one of your years on council.
Yeah, I think so. Yeah.
So for the first couple of years of your tenure, I would say we kind of work collaboratively with the finance committees and staff to come up with different reporting formats.
Yeah,
and that's
yeah.
the product of what you see here.
Yeah.
Again, it's a work in progress. We're open to suggestions. And then you in particular as finance chair several times through those years, once the finance committee has presented this material, you've made a very good point through your committee reports or liaison reports to supply to the council. What I think we're talking about now is to do something, the next step, I suppose, which would be not just council, but more importantly to the public as well. And that's a routine that I think, need to give some more thought to how to do that so it's actually useful information for folks.
Don, is that, although Tom, just want to make it clear with Don, was that your thought that it was public facing or town council facing?
Well, I think it really needs to be both. I think the thing is, if it's in front of the council has a chance to talk about it, react to it, comment on it. I think that by nature will help to kind of keep the public clued in. But I don't think there'd be any harm in us also trying to communicate to the public. And I know we're getting some great traction through our efforts in the communications committee. So these are just standard things that I've seen in other places where if you build it in and it's a discipline, then it really is to get into sort of a cadence where you expect it and it's easy to review and it just keeps it top of mind and keeps it at a level a higher level, so we're not getting bogged down in minute details on things as a council, and I think also as a public, the people will hone in on issues as they wish. That'll continue to happen, but I think it wouldn't hurt for us to do both. But I think if we start with the council, then there ought to be some nice waterfall effect, hopefully, for the public.
And we do, like John, Councilor Clucci said, that we do put these out on the finance department's website, on the town's web. However, I don't think we've done it recently because we've got the new web pages, and I don't think we know how to do that yet. So that's an in-process piece, but these will probably be one of the first ones that go up once we figure out how to do that.
We'll get you that training, Ruth, I promise.
So maybe for the next finance committee meeting, you guys would it be possible to come back with sort of the one change we talked about, just that, the columns we talked about, and then maybe give some thought about what a one pager might look like that could be disseminated to the town council, and also something that could go, to get to Don's point, to the public. But I do understand not all of these pages and all of this information, and I don't know what that would look like. And I know you guys have had a lot on your plate, but if that works, if not, we can take it up at future.
I'm quick to agree, but I fear it's really Ruth's heavy lifting there. So why don't you let us collaborate as staff, and I can report back to you shortly on that.
Yeah, Peter. I had a comment on that. I think I'm hearing people say, kind of like something that could be regularly discussed at council, high level. We're in August right now, so I'm almost wondering, and even if it hasn't gone through finance first, I'm not sure that needs to be a barrier to it. But if we could set 4 times a year that a council would have this information at a high level and have it say it'll be on an August meeting agenda, it'll be on a November meeting agenda, so 2 months after the fiscal year
Yeah.
close. So people could kind of say, okay, I'm going to see these, the council talk about these in August, November. I believe May would be 2 months after the quarter end. And I'm sorry, can't think of the other one, April or May. But, I mean, you could always set it up and try it. And if there's reasons why that doesn't work, then we could always back off of it. But if it's not a regular feature and it doesn't get, put on the agenda as a policy, I think it is easy to let it slip because so much else goes on.
Councilor Gleisting, what you described, I believe, is in fact one of your town council goals for the
Yes.
year. And as we all know, this spring kind of took us in a different direction. So we're trying to recalibrate and get back on track here.
We could do that as of perhaps the second council meeting of each of those 4 months.
That'd be great.
Then
Right.
we would know specifically. I'm not sure we could do it as of the first council meeting, mostly
Right.
because it might just be too soon.
So if possible, I think, Tom, you'd offered maybe the next finance committee meeting or the one after, you guys could come back,
Mhm.
kind of incorporating what we just discussed. John, are you okay with that? Does that seem reasonable? Okay.
Also, if you have any specific suggestions or ideas, send them to us and we can work to incorporate them too.
I'll say this one out loud, but a big part of what I'm doing is holding up the year-to-date revenues and expenditures and just adding up. Okay, so on the town, how did I balance out?
Right.
How did I balance out? Kind of what Peter was saying. It might help to just have a total, a combined, revenue and expense total. Maybe
Total
have.
page, yeah.
Thanks, John. You said it with much more clarity than I did. I was doing the back and forth, adding up, and kept getting different answers. So yeah, that'd be really helpful.
Councilor Clucci, I wonder if we could use you. I've just always been impressed with your ability to present complex information in a real simple format, and that's a real skill. So if you're willing, we might draw upon your expertise in that regard, so we can get a
I
format
would be
that
happy
makes
to
sense.
help.
Thank you.
Yeah.
Okay. Anybody else have anything? I know we got lots of other items here. The next item was the CEA policy. I know this is, Tom, you want to give some background? This has been through multiple committees and multi sort of red line versions, and kind of where we are at this point in time. And
Yeah, I wish I could put a stake in the ground, but it's probably nearing 2 years of review from kind of the germ of an idea through multiple committees, as you say. And it's my recollection, looking back at the notes, that now it's firmly before this committee. Rules and Policies is the one that began with this committee, with this policy, passed it on to you. And there's been a fair amount of changes. And I guess one point we should talk about is whether those changes are substantive and whether you want to send it back to the other committee. I'm not looking to prolong this whatsoever, but I just want to respect those that have had involvement. I suppose it doesn't matter because either those folks are off council or they're currently on council, and we'll see it in its final form anyway. So beyond that, I think the biggest change most recently really came from Councilor Gleisting's comments. She's introduced, the concept of assessment criteria, and that really, in my mind, and that's what's shown here as the highlighted text. I think all the other changes through the multiple iterations have been incorporated, if you will, and these are the final changes from my perspective. I did take some time today and went back through it and do have a couple of comments going through this, but they're really related to the substantive changes that are being proposed. So I'm pleased to hold those until you jump into that conversation. I guess I would also observe this policy is specific to economic development TIFs and credit enhancement agreements. And as we know, we're currently dealing with an affordable housing TIF in front of us. And so there has been at least conversation around and a decision, frankly, not to go into the area of affordable housing in this policy, but it does beg the question, should there be a separate companion policy regarding those as well? So I guess I'll stop there, and I'm pleased to offer some comments as you take up the substance.
Councilor Gleisting?
Yeah, so Peter, since the scoring criteria was added, I just wanted to add a couple of quick points on that. And
Sure.
I think it's something you wanted to add. So first of all, it doesn't really need to be in here as section 3. It doesn't really hurt to have it here. But it is in an appendix. And then where it really needs to be, there are 2 major things that need to happen to it. Where it needs to, in step 4, under section 4, it needs to be referred to here that the town councilors individually will complete the point review. And then the other thing that needs to happen with it is the possible scores need to be applied. So that, for example, if have a quality of development and overall aesthetic beyond that which is minimally required by the zoning ordinance, if that's minimally important to us, that might be a possible 10 points. Whereas create an incremental tax value equal to or greater than $2 million, which I think we said in the past that we might want to discuss that amount on once it gets to council, might be a potential point criteria of 20. So I think one of the things that we're missing is to apply the points, and the possible score should reflect the how important we feel the value is. And then an individual counselor would rate how they feel the project meets that. So for example, if it's if we have if it's, let's take the Energy Star. If we say that's a possible 5 points, and the development is very strong on energy efficiency, meeting the certifications and everything else, then I might give that a 5 out of a possible 5 points. If it's not really a consideration, I might give that, but they did a little, I might give that a 1. So the policy needs to go forward with what the possible scores are, which is what is missing in this right now. And then individual counselors as we do that. And so what this would do would be when we get to step 4 and each individual counselor has rated it, there would be an overall score. Here are the potential points, and here is how this particular CEA request scored in each one of these areas. And here is how it scored overall. So let's say the potential points is 320, and this application scored 50. So we could set a threshold in the policy itself, or we could just use that as a tool as a council when we're looking at it. So I would say if something got a 50 out of a 320, it's probably not going to have a very good chance at getting a CEA. And whether or not the categories are correct yet, I don't know. You might want to start with it and modify it over time. But there's definitely something missing in step 4 to refer to it. Step 4.4 to refer to completing the scores, and then that the scoring would be a criteria along with the other things that would be presented to council. Does that make sense?
It does. I just had a couple of observations, if I could. I don't doubt that the current composition of council would be interested in have the capability, I think, of doing what you suggest. But I think thinking that a future council, 7 council members would have the interest and take the time to actually go through the scoring, with all due respect, I think is probably too much to expect. So I understand your point. And I wonder if there's not a kind of a different way of getting to the same point.
So
Sort of having individual counselors all tasked with that, because we'll be chasing cats.
yeah, I mean, that's a fair point. What the, maybe you could say just the finance committee would do it. And then that score from the finance committee would be sent over to council. The idea is that if you look throughout the entire policy, and some folks who have read it have brought this point forward, it's very subjective. And it is going to be subjective by nature. So if you're able to, you can take subjective points and you can assign scores to them, and then you can objectively look at some subjective data quantitatively. So it's a way to take subjective data and give it some type of a quantitative score. But if all 7 counselors wouldn't do it, I suppose the finance committee, who would be, although it doesn't really, the reason it says for the whole council is because there's no real step in here that the details would, that it, maybe there is, but I'm not sure. I mean, it seems like it goes to workshop pretty quickly. So I think the entire council gets involved pretty quickly.
Yeah, with all due respect, I'm just suggesting my past experience. It's exceedingly difficult sometimes just to get everyone to do things. And some of these may be very time sensitive. So I think your suggestion of finance committee is a very good one. More times than not, those folks will be inclined and interested in these sorts of things. And plus there's only 3 as opposed to 7. I might also suggest, rather than each individual of the group, one other way to do it is that the group collaborates and comes up with a composite score. And the value of that is it forces discussion, and it hopefully shakes out subjectivity. There could be a counselor who scores something very poorly for some reason and unfairly brings down the overall score. Whereas if you subject it to a group process, some of that, those outliers and anomalies get kind of scrubbed out through the group discussion, and your opinions can be changed. So just a thought. I think that's a way to guard against any weighting that wouldn't be fair to an applicant. I guess the other point I would say on the threshold, two points. You could have a threshold that you task staff with, and I would say it'd be a fairly low bar if something is a real turkey. So to your point, if it's a 320 total points, if it doesn't score a 200, it doesn't get past step 2. So it doesn't waste anyone else's time. There could be that kind of initial threshold inserted. And applicants will want to do their own pre-scoring. You know what I mean? If they're smart, they'll look to see how they'll score. So I think it's important to tell, this is an important process, but the real value of it is predictability, to the extent that we can introduce that, is to say, here's what we value. And you'll do that by virtue of how you award points, possible points, and to give people a known target for them to work toward.
And we have, can you speak at all? This is really a little bit of a non sequitur, so I apologize if it's not really relevant, but we have a scoring point for the affordable housing application, correct?
We do, but the notion there, these scoring approaches work best when there's multiple applications and you're comparing one against another. So in this case, we're presumably not going to have multiple ones at the same time. We could, but we'd be comparing against a benchmark, and that benchmark presumably will reflect your values, what you think is important. So I just want to be mindful that we use it.
My question was more, did we have a, so were you involved in helping create those values in that point system, I guess was my.
Yes, I was the chief architect of it. Yep.
Okay, right. So I didn't know if you could compare these points with some of those to say, are we missing anything, or, would some of it not be, worth including, or, so I don't know how carefully you've had a chance to look at the list and give an opinion on the list.
Incidentally, where did it come from? Were you able to, was it from another policy?
Yeah, it was from another policy.
Okay. No, I think it's fairly comprehensive. The one thing I didn't see in here, and it may not be, I think it should be in the policy, but maybe not in this matrix, is this cost to serve analysis, ROI analysis, which has become a norm. By my reading of this draft, I don't see any mention of that being a requirement of this.
Yeah, and Tom, that was one of my comments that I think that's important to weave in to the into it somewhere, however we do that. John, I know you had your hand up, I think.
Yeah, I just, I had some comments, and I liked actually what Tom was saying there about maybe instead of having this be individual counselors fill out a scorecard, having a discussion maybe in a workshop or something to go over the value of a project or something after it gets to a certain point. But I've been struggling with this, and probably why it's taken so long to get it to this point is that you can't really bind future councils to do what you want them to do today. So by definition, a CEA and a TIF needs town council approval. How it gets there doesn't matter. If a council wants to put it on the agenda, they can do that and bypass this policy altogether. So it just seemed like there was if this was something we were delegating to the planning board to shepherd through to the process and then get it ready for final council approval, I think it could make sense to me, but right now it doesn't. It's like I don't understand the point. I feel like maybe some guiding principles or something for things councilors should consider when evaluating a TIF or CEA, like the cost benefit analysis is probably like 10 of them or something like that. That might actually have more value than a 52-page policy that nobody really has to follow. That's just kind of what my.
Well, with the exception, John, look at the new numbered section 4. It's the application process. I mean, staff certainly has to follow, as applicants would have to follow council policy. I think there's value in regularizing that. We don't really have, we don't have a defined policy as to how we receive these and how we move them through. Yeah. So predictability is important for everyone involved. So I think there's great value in that regard. But your point's well taken. The final award and decision on whether one's granted is solely within the council at the time.
Right, but I would say, when past councils have put policies in place, as a current councilor, we definitely follow them. And if there's issues, we maybe visit them and change them. But I'm not sure we're trying to bind past councils as set forward a methodology to use that they would certainly be able to modify, and I would think since it's new, would end up getting modified by future councils, when, issues or whatever come out about it. Because certainly anything you start with would not, would probably end up with some modifying. I did have, I had a couple of small things, but I did have one other thing I had talked to Larissa about, and I think it's just, Tom, so I had picked up on your point, right away in the beginning. I mean, I think this should, very clearly say, so initiating or considering applications for economic development tax increment financing, because I think we want to make it, at least I think it should be clear this is in the realm of the economic development, because we mentioned the DECD, et cetera, and that's the pathway that all that would go. And so I only bring that up because I had talked to Larissa about the applications, and so I'm struggling with the verbiage a little bit here, and hopefully Tom, you could help me through this, because the town is the one who applies for a TIF, right? So, and then then the applicant, we don't have to go back to the state for a CEA, so the TIF application we have in here is Appendix 2 is a whole lot of things that we would have to tell the state, correct? If we wanted to do that.
Yeah, I wondered why Appendix 1 was in here. Actually, it's Appendix 2, I guess, is the one I wondered about. Though we may wish to have an applicant, if they're the one driving the creation of a TIF in the first place, to really task them with performing some of this work on our, advanced work.
Right. And we get, then we get to Appendix 3, and then we say TIF/CEA. So, I mean, just the way I draw it in my mind is, if we were to create another TIF somewhere, somebody might come to it. So let's put affordable TIFs totally aside, because I do feel like that's a separate policy. But somebody might say, well, this is a good, but I think that would almost originate with you and staff, and maybe because somebody came to you with an idea, and then we would work the TIF solution from there, and then the applications are from the CEAs that people might or might not want to apply for in an existing TIF. So I don't know. I'm just struggling with that a little bit to see, I think the questions are very interesting in the TIF, that would be interesting to council to see, hey, what's this going to do? Job creation goals, what are they going to actually bring forward? So I think some of the questions are kind of good, but I'm not so sure that it shouldn't be all kind of melded down into one application that covers, the type of information the council would want to consider. That's kind of where I'm at on that. And then we have the, like I say, the town council quote unquote scoring sheet is listed again. We probably don't need it both in the policy and an appendix. We could just refer to the appendix. But I'm fine with leaving the applications one way we are. I mean, we need to move forward, and that could always be amended. I just kind of struggled with it just a little bit myself, but I'm happy enough to leave it the way it is, so that we can move this forward. But that's kind of where I struggle just a little bit with the difference, because I think most of the applications, we have a pretty large TIF in town already. So I think most of the applications we're going to see going forward are either affordable housing TIFs with a CEA or a CEA within our existing TIF.
I would agree with you.
So I think I'm hearing a couple different things. One, John, I hear you about whether, it makes any sense whatsoever. I guess where my thoughts are, I think we were this has been around for 2 years. I think it probably makes sense to try to bring something back to the full council. I think your point's a great point, but I think there's an expectation that something will be sort of come out of finance anyway. But I think it's a great point. I think we should have that conversation. I think Tom makes some good points about the importance. Betsy, I wasn't quite sure when you were talking about the possible score, whether you were thinking on some of these things you wanted to have each one of these items having a different range of scores, or whether it's just a simple 1 through 10. So I don't know if, just for clarity.
Right. So I would say, if we could take a moment to go through, or we could each do it. I was hoping to get it finished, but it may be, and maybe I could have sent you an example. I'm sorry, but, it certainly may be that they don't all meet an equal priority, and I don't want to pick on energy efficiency, but maybe energy efficiency is not as valuable to us as incremental tax value.
So Peter, as I understand, and I would agree, this column says possible score. What Betsy's suggesting, and again, I agree, is that we should indicate what, by way of preference, assign a point value to the item. And then there should frankly be another column that is basically the applicant score. So you go through an application and you're comparing it against the stated criteria, assigning it a score, and you total it up at the bottom.
Yeah, and I would think what I had envisioned was the applicant would score themselves and even give us a reason. Well, okay, I just gave myself a 10 out of 10 points on this particular category, and here's why. Because we're going to do this, we're going to do that. I mean, it would be up to the applicant if they wanted to do that, but they would be able to say on their self-scoring, and then we would judge that, okay, well, this is what they're saying, and I agree, or no, I don't think it's really quite that value. So there really would be kind of 3 points, possible score, the applicant scoring themselves, and then this council score, what the council gives it. If we're not going to do a council, if we're going to do a finance committee score of how the finance committee rated it. And then the bottom line of the possible score never changes because it's the maximum of all the points you could receive. The applicant scoring himself, that would change depending on the application. And then I think to get started, I think Tom's suggestion is fine. That we would go take this, we include it in the policy. This goes to finance, and finance in committee goes through and discusses each one and gives it a composite score. I think personally, I think that would work. I think that would work well. And, you know, if it doesn't, somebody could change it in the future. And then that score would be different for each project. Does that make any more sense now? Or
Yeah, I'm just trying to figure out, I mean, if we're going to score each one of these a possible range based on priorities, that adds some complexity just to, you know, I was thinking we would be able to do something with this tonight to kind of get it out of committee and on. That's going to, I mean, so that means the three of us, I guess, or staff could come up with possible scores for each one of these. I just think that's a lengthy conversation for us probably as a group.
Right. Well, what about, I mean, that's a really good point. You know, what if we set a range for the overall scoring, the criteria to be assessed? So the range possible score would be somewhere between 10 and 50. And then, you know, let staff take a swing at it. And then, you know, we could just discuss it at council. And, you know, if someone had a real issue with what got chosen, they could address it ahead of time and say, hey, I think that's too, you know, I think that's too high. You know,
Everything in my experience suggests that that is to be avoided if you can. It's just exceedingly difficult, even with three of you, to draft, much less 7. So as much of this work can be done at committee and come forward by way of a, you know, complete recommendation, I would recommend that just for ease of process.
So one thought building up what Betsy said, I mean, we could just keep it simple and just say possible score on a range of 0 to 10. But that would give everything, then each person's scoring. In this case, I do like the suggestion, maybe the original policy has it go through finance. It's either that, or I guess what's the will of the committee? Betsy, John, do you want to put this on the agenda for the next finance committee meeting and try to work through the possible scores based on priority? Any sort of preference? It's just this thing's just lived on forever. So
right.
Staff's willing to take a swing at putting together possible scores. It's going to reflect, I guess, our priorities, and we're certainly open to get your input, but we can take an attempt at that so you aren't starting from scratch.
I think that would be helpful.
Okay.
Yeah, I support that. And it's really points available, right? Or, you know, point value, not. So this is how much, you know, item 1 could get you. And then next to it would be the actual applicant score. Okay.
Yeah, and I think the introduction of this approach is good in that it makes something that could be considered subjective more objective. But and if that's our goal, it's the right goal. We need to make sure that we prepare it in such a way that it's as objective as possible. And I'm pleased to hear that you're willing to have the finance committee do the scoring. And I really do think having a kind of composite score from you as a committee or the future committee is a way to kind of wash out any outliers, if you will. It kind of forces you to put your heads together and disagreements, whatever it takes, and come up with a composite score. And because they're, you know, in normal circumstance, if you've got multiple applications, you could do a range up to 10 points, and then the highest point, you know, wins, so to speak. But
yeah,
this is an application you're comparing against a static benchmark.
So Peter, I mean, this is August 13th. And if we had a goal to get this to council by September 16th, I wonder if we could, and not that the chair and the co-chair would approve that, but if we had that goal, you know, could we work backwards and, you know, maybe come together for, you know, one more meeting just to finish this off, and then get it to council by September 16th. Obviously, it would be great if we were doing it, you know, more like around is the second week of September, so everyone would have quite a bit of time to read it on council. Do you feel that's workable? I mean, I think we're closer than it seems like, especially if staff takes it. You know, I think we have a pretty, I mean, I could be wrong, but I think we have a pretty common set of values across the town that, you know, we may have a few differences, but I think a lot of values we have are the same. And then the ones that aren't, we could debate those.
Yeah, I'll defer to, since Tom Sawyer volunteered his team, I think it depends on, you know, what.
Yeah, I think we can turn that around if it's really fleshing out this scoring matrix. I think we can do that. If you're willing, I do have 3 or 4 questions I just want to check in on, and I think we can move quickly through them because I'd like to bring to you as complete a draft next time you meet.
Yeah.
So Liam, if you go back to page 3, it's in section 2. No, I'm sorry. It's under credit enhancement agreement, right there. I just want to check in terms. Agreement shall extend between 1 and 20 years. The statute allows you to go to 30. I just wanted to confirm with this group that you wanted to limit your flexibility in that regard.
Well, I don't remember that conversation. Is anybody?
I'm pretty sure that
I
was.
don't know what we would.
No, I don't remember that. It doesn't seem like it makes sense to limit it to 20, although I could see someone making an argument, but I don't remember the specific conversation, no.
Well,
Yeah, I think having the range, Tom, 1 to 30, then.
Yeah.
Yeah.
Okay, and the next
Remember
thought,
that concept.
the next thought says up to 100. So you're recognizing that, you know, so that struck me that it should probably be 30 just to allow yourselves the maximum flexibility. You can do
Yeah,
something.
everybody agree just by nodding? Everybody agree? Yeah, I mean, makes sense.
Hey, Tom,
Yes?
do you mind if we back up since we're on that page? I had one for that page, right? A bullet right before credit enhancement agreement. Just to add, the town by vote of council majority may modify the portion of tax revenue to be retained in the designated development district. So that is the way they work, but I thought it would be good to actually spell that out, that a council can vote to change that.
So that's just an additional bullet in that TIF
Yeah,
district
and it's
discussion?
Yeah, above credit enhancement.
Would you mind sending me that language?
Oh yeah, no, I definitely will.
Okay. Yeah, that makes sense. This whole section is just a recitation of what the TIF statute allows. So I think that's
Right, exactly.
right.
Tom, actually, while we're doing that, can you go to page 1, section 2, tax rules and conditions? We're saying it has to meet criteria, at least 3 of the following objectives. Tom, is that boilerplate language or is that unique? I mean, can that be, what I'm trying to address is what you brought up. Nowhere in this document do we talk about there has to be a financial analysis done to make sure that it makes economic sense for the town.
No, these are, to my knowledge, these are not derived from the state statute. I believe these are local preference objectives.
So my request would be wherever, as you guys do the edits, and if others agree, wherever it fits to build on your observation, I think we need to have a criteria in there that it has to make economic sense for the town from a financial point of view as well.
So is that your cost? Is that the cost? Is that where you want to put the part about the cost analysis?
Yes. Yeah. Or somewhere in the document so that becomes part of the evaluation. I don't know if it fits better in the criteria. But in order to show that it makes economic sense for the town financially, then you've got to do that cost analysis. Tommy, you know?
Yeah, I'll look at it. Now, I think you're right. It probably is best stated right at the front end of the document. Hit you right away. And the way you worded that gives a fair degree of latitude. You know, economic sense or financial sense may mean one thing to this council and mean something else to another. But it preserves the thought that this is an important checkpoint that needs to be met, an objective.
John and Betsy, you guys okay with that?
Yep.
I am. I'm not sure where the right place to put it in is, but yeah, I think you can add it
Okay.
somewhere so the expectations at least like that.
Okay.
Peter, do you see that continuing on to the scoring sheet as well? Because I mean, I think that on some level, that analysis will be, again, somewhat subjective to the counselor, correct? I mean, what the actual ROI amounts to and how significant that is.
Yeah, my thought was, maybe it's up front here as one of the conditions, and then maybe it does work its way onto the scoring sheet. But I know Betsy and Larissa had worked a lot on that scoring sheet, so I don't know how John and Betsy feel, but that was sort of a thought.
No, I'm totally open to this scoring sheet to be changed. I don't feel like it got much of a vetting because, as we did this and then the world blew up and then, so it was an initial pass. But yeah, any suggestions, improvements, changes to the scoring sheet, I'm totally open to. I mean, it should reflect, what the council wants to look at. And that seems very important to capture that.
So I'm okay with staff as they come back and noodle this and see where it fits best, come back with a recommendation and we can look at that.
Okay.
Yeah, I would even be okay with, like a checkpoint in this process somewhere is for to supply a standard cost benefit analysis or ROI or something along those lines.
Okay, great. I don't know if that answered your question, Liam. We probably confused you more than.
No, it did. I mean, it seems like that seems to be a common theme of council discussions over the last 12 to 18 months as these things have come forward is what's the impact, what's the cost? And so to the degree that's going to continue to be a major theme and highlight, then I think that there's probably a few opportunities to incorporate that into the understanding.
Okay.
Well, I really quickly on that, the number 5, create the incremental tax value, maybe incorporate it into that. I think that was one Larissa had taken out of the document that was already in and kind of put that in. It might be, working that one, it's incremental in relation to, cost to serve or something like that. And you're right, it's objective in the end, right? Because someone might say, look, $1 million of incremental value with a cost to serve of 500 is something we ought to do. And someone else might say, no, it's nothing we should do. So, it does end up being objective, but I think it's a little bit captured in number 5 on the scoring sheet, but it's not totally captured because to me, the way this one is worded, number 5, is it's not very it's not relative to anything,
Sure.
2 million,
Right. Yeah, it doesn't. It tells you what
right, yeah,
it tells you what it's going to bring in. It doesn't tell you what it's going to cost, right?
right, exactly. Yeah.
Another question I had, it's at the end of section 2, just above the assessment criteria, going up the 3rd bullet at the top here. Developers will present council with an annual report on progress. I'm mindful of this only because I am working with the Downs to do their progress report next week. And theirs is very detailed, and we have responsibilities as well. So my simple question is, what's included? What's the expectation? And there may be some where you don't need it. So I'm just pointing out that might be a difficult one to satisfy without stating what the expectations are in terms of what to report on.
Tom, kind of along those lines, in Portland, they have an economic development committee or something that provides a report about all of the TIFs and CEAs to the council once a year. That I think has value and probably is sufficient, but to do that, they probably need some way to get information from the individual applicant.
That's
Well, the difference there would be task staff with doing an annual report as opposed to the individual
Right.
developers.
Right.
And we could work with council to figure out what's of interest in that regard.
Yeah, Yeah, that's a very helpful report. It's pretty detailed and it does go to even tip by tip. And it summarizes it. I don't know, does Councilor Hamel, since you were very involved in this in the past, do you have a comment on this, or not to put you on the spot, but?
I stepped away for just a minute, so if you could repeat the question, that would be helpful.
Yeah, you're entitled to do that. You're not on the committee.
Sorry. I snuck away for a brief moment, but what's the question?
I'll let Tom repeat.
Yeah, the third bullet here, Don, if you can see the screen, it says developers will present council with an annual report on progress. I was just observing the point that unless we state our expectations, it's going to be challenging to get that done in a format that's satisfactory.
Yeah, Tom, I'd rather have that turn on the negotiating of the CEA, rather than put it in here as a policy statement. But could you scroll back just a minute, just one more page? Yeah, I mean, I don't know. I mean, I look at the one. Maybe not all CEAs are created equal. So certainly the downs. I think it made all kinds of sense for us to put that in there and to be pretty specific about it and to define processes, that sort of thing. Do we really Little Dolphin?
Right.
Expecting them to come back every year and update us? I don't know. Or Bessie too. I don't.
Yeah.
I know they have regulatory firms for reporting, but I don't feel the need necessarily for all CEAs to do that.
You're making my point much better than I did.
Thanks.
You're right. I think you'll know when you want that and to negotiate the terms in the CEA where you are explicit as to what the report will contain and its frequency. I think that's a better place for it, and it's enforceable, frankly, in that document.
Okay.
So, I mean, I guess that gets back to one key question that you asked, Tom, is this going to apply to affordable housing, CEA/TIP? So I do think those are a little bit different, but you could, if we stuck with economic development ones, I'm not sure you would need that from WEX, right? Because the WEX one was to entice them to come to Scarborough. It's basically a reduction that gets passed on, to that lower their cost of being in that space. So what's the performance criteria there?
That's my point precisely. Yeah.
I think if I could step in, I know that we had asked for something like that on an annual report, mostly because some of these credit enhancement agreements said we're going to hire X number of people, or we're going to do this, or we're going to do that. And there was no way for us to actually ensure that they were actually doing those things. So I think that's one of the reasons why that was put in, but
yeah, well, you're right. We could do that because, if numbers of people don't materialize, then maybe the housing thing isn't going the way we want. And, but I think we have in there credit enhancement agreements may contain provisions for the suspension or termination of benefits to the applicant as provided for in the agreement. Does that kind of get to that? You're going to be looking at criteria like that you would have to have some kind of reporting that you would include in the negotiation.
Well, I think Don's point is excellent, which is, and maybe the thing to do is to strike this general statement and requirement, if you will, for all to be treated equally. And for those that it's necessary and appropriate, it be contained within the CEA. So maybe it's a simple, different phrasing to the extent that the town is interested in frequent reporting from the developer. Such expectations will be negotiated as part of the credit enhancement agreement.
I'm okay with that.
I like that.
Betsy?
Yeah, I like that.
I wish I could remember what I said.
It's on tape.
I'll listen to the tape. All right, moving on.
John, are you okay with that? Did I see you nod? Okay, great. So number 3?
Yeah, am I still have the floor here?
Sure.
Okay, just trying to move through for you. In section 4, Liam, it's just above appendix 1. Keep going. Yeah, right there, top of that page. So that first bullet, it talks, this is the retainer, and I'm not questioning the retainer. There was a lot of conversation, so let's move past that. but it's to be used to reimburse for staff time. And I'm just flagging, I'm not sure how we will be tracking that. I'll eat those words. We'll figure a way to do it. So let's, we spent more time than we should have on this already.
So,
All right.
on
And
section-
then if you allow us just to have a little bit of editorial license on the appendices, I think we talked about it earlier. I think there's some redundancy here. So
Okay.
let us take a look at it and come back to you. I think we understand what you want to accomplish, but I think we can do it a little simpler.
Can I ask just one additional question on the criteria list? So go to number 3. Ian. And I was just curious, and we may already have this addressed, but the first bullet, documentation of employment or financial projection must be provided. Do we want to change or to and? I mean, do we want both? I mean, I guess I'm curious why it's one or the other.
Yeah, I would say change it.
And it appears in a couple different places. So
I might suggest, 4 is the employment one. If you scroll down, Liam, just one more. So you're very explicit on the employment piece. So maybe you just limit the first one to documentation of financial projections must be provided, because you really cover it pretty heavily in 4.
So do what? So what was your?
Drop the reference to employment in number 1 and rely on number 4 to supply that information.
Okay.
And Peter, I just had a couple more in section 4, which I can email, but this one was just kind of the housekeeping. I think we mentioned this briefly, Tom, that this is an application process for credit enhancement within an economic development TIF, so as in we don't have to spell it out everywhere, but, it just might make sense to make sure we're all talking economic development TIF. And then Peter, I had another question that I wondered what you and John thought. And it had to do with between step 3 and step 4. So I think now there's a new step in there that we're saying that the finance committee will do a composite score on the scoring sheet. Is that what I understood?
Yes, I think that's what we suggest.
And then there had been some questions. So, at step 2, we had talked about, a lot of work has been done at that point, that maybe the town council would be notified, via executive session if necessary, that an application, has been received. No other work would happen at that point other than town council would be notified. It wouldn't have to be executive session if we said the town council wouldn't receive any information, that it would just be, we would just know that the town had been working with folks and there was one coming on the docket. Or if we wanted the town council to have more information, in all likelihood, it would need to come through executive session because, you're not really in negotiations yet. But there was a point that we discussed of, kind of a notification, because I think there could be a long time between step 3 and then the finance committee. And then by the time we get to a workshop or something like that, or I think the thought was, there's, it would be good for the council to be notified a little earlier sometimes in these process, even without details. So I'm just bringing that back up. That had been a past discussion.
So you're suggesting is there something we can build into this language that gives that heads up?
Yeah, in step 2, the town manager shall have the final authority to invite application. The town council shall be notified via executive session if necessary that an application has, I can't read my own writing, but I can finish that word off if we're interested in doing that.
Yeah, I mean, I'm okay adding that sort of step. John, what about?
Yeah, I remember, Peter, we had quite a bit, and Tom, you probably recall this as well. We had a lot of discussion about this. Where is there an opportunity for an early flag, for the council to know this is coming. And I know we went back and forth on it quite a bit, and it appears here when the actual application is completed. I think I recall you making very good points that, well, it's a lot of this is staff work. It's not really real until it comes, the application's approved. So we also talked about, the council, or at least the finance committee, would get an early read of this because of their participation in the scoring. So I don't know. Otherwise, I don't know that there's a specific point other than, when the chair gets the request to schedule a workshop and we're on the takeoff roll. So
I think where it gets real is right at the end of step 2.
yeah.
The sentence says the town manager shall have final authority to invite an application. I think when that invitation occurs, there's a mutual obligation to advise the council of that.
That's where I had put it at the end of that.
So,
Okay.
so
Great.
John, would you be okay adding some language that just codified that?
Yes, and I honestly, I'm not crystal clear on where the right checkpoint for finance committee is, whether it's before or after the workshop. It's probably before, but
I agree.
yeah,
Funny,
it could be.
I had
debated.
it after. I had it after 5, but
Yeah, so there you go. Anyways, I'd be open to somebody's thoughts or suggestions on that.
I had it before because I had had an edit in 4 that the council would consider the composite scoring sheet. I wasn't calling it that before that, but the council would consider the scores applied from the applicant and from the finance committee as one of the factors.
I guess what I'm thinking though is for the workshop, this is just, we're learning about the project.
Oh, that's a good
And if
point.
there's no
Yep.
appetite at all,
Yep.
don't even send it to finance, just, it can die there. If there is, hey, finance, take a
Yeah.
clear look at
No,
this.
you're right. We learn a lot more in that. So I think you're right. It does go after. I think you guys are right.
So Tom, is that clear as mud?
yeah, I think we can work it into 6 because
Okay.
6 in the end talks about finance committee making a recommendation to council. It seems to me that recommendation should be based among a number of things, including scoring.
And then I just had one other quick kind of like little housekeeping on the under application fee. Just a little bit of the verbiage is not great. It says, and any other direct expenses like required legal fees. So I just think it's a little cleaner to say, and any other direct expenses such as legal fees or consulting fees. I think like required is not super concise language. So I would encourage, Tom and Liam, as they look at it, if they find any language that's not really concise, I'm all for cleaning it up. So just to make that point. And that's it. That's all I had.
All right, so
Okay.
staff's got some lots of work. Tom, maybe let us know when it's reasonable for it to kind of circle back through. I think Betsy made a good suggestion. If it's possible to do it before September, that'd be good. But if it's not, just let us know.
Before September?
Well, before that
Okay.
town council meeting. So we could meet maybe sometime early September as a finance committee to kind of look at it and get it out of committee. But that's,
Yep. Can you agree now that it would be single item so you could be solely focused on this with the hope of
sure.
getting through it?
Yeah. With the hope of getting through it. Sure.
Okay. I'll work directly with you, Peter, when I consult with staff. Okay.
I'll just make one more quick comment that may or may not help Tom. With all these appendixes, and then it goes into appendix 3, and then there's more criteria to be, so I think the goal was to, have, appendix 3 is so that they would explain, but to focus on the scoring sheet, make sure we have everything in the scoring sheet that we want. And then they're not trying to answer questions outside the scoring sheet, although there may be some that are applicable. But as you can see, this tracks with the scoring sheet. So if we're tracking with the scoring sheet, that kind of ties the whole thing together. That was the intent anyway. Which I hope means we can take some stuff out, I guess, is the long and the short of it. Yeah.
Okay.
That's my intent.
So in respect of
time and where we are, there's 3 agenda items left. Maybe 4 agenda items left, actually. Does anybody have a preference? I mean, I think some can be pretty quick. Suggestion might be the financial analysis of the proposed CEA. We've got sheets in front of us. They're pretty self-explanatory. We probably assume we're going to be reviewing these at our next, at the first read or whatever. Does anybody want to spend any time on these sheets that are in front of us? Are there any questions, or have we reviewed them and we're fine kind of moving on?
I was fine as presented. I don't know if Tom wants to go over them.
The one thing that would be helpful, and I'm pleased to talk about all of it, but yes, these scenarios, these directly came out of the last workshop, so that should be familiar to you. The first scenario was what we've been working with right along. Scenarios 2 and 3 were 2 variations that we were directed to run. I've had some conversation with Don and Paul about this. From our perspective, and the developers has expressed their interest, I guess, in scenario 3, which is the 75 at 20 years. And so we have proceeded, maybe at some peril, but we've proceeded with preparing the draft CEA based on this approach. From my perspective, it's obviously far superior to the town. It saves about $1 million over term. And it enables the developer to get the full 3 points, which they've stated is a real key objective of theirs. So this seems to be the winner, so to speak. And I guess it would be helpful just to use this group to confirm that that's the case.
Yeah, I mean, I think from my perspective, it makes sense. I think the only thing I had meant, or one of the questions I asked is, is there something we can learn from this process? What's become clear to me is these processes these deals are really complex, and the developers bringing stuff to us are really subject matter experts. But, I guess it just begs the question, if both of these have the same points, but it saved taxpayers $1 million, that should have been the first venue we pursued. So I'm just wondering, going forward, whether it makes sense that we hire on our team some type of financial consultant that is really familiar with these things and kind of can show us the ins and outs of how do we get to where we want to go, but do it in a way that's the most efficient for taxpayers. And so I think it's just a question we should be asking ourselves to evaluate future deals. What do we need to make sure we're maximizing what we get versus what it's costing, if that makes any sense?
Well, just let me state the challenge that I face. A developer has a right to make a request, and they did. It is often difficult to know whether I should insert myself to negotiate beyond their requests. And in this case, clearly there were other options here, but what was being presented and what I had worked with them is what they had asked for.
Yeah, but but that where I struggle with it, I look at it as a town council member, it's my fiduciary responsibility to say, we should be negotiating with them. And part of the process, what we heard in sort of the first sessions were the only option was what we were looking at. There was no other option that they weren't going to lose points, and other became available. But I'm just saying, when we get the developer's deal, is there a mechanism? Is there a resource that we can use? I mean, certainly, our attorney brought it up at the workshop. The attorney brought it up somewhere else along the line that would be helpful. So it's not right or wrong. It's just, there's a learning that these things are complex. There's lots of different ways to get to the end result that can have, as in this case, pretty significant consequences to taxpayers. So I'm not trying to find fault
No, I know. No, it's a dilemma. I mean, Shauna was involved from the first discussion on this matter in lockstep with me. So, that suggestion came up only, I think, in response to reservation and concern that she heard being expressed by council members as another way to approach this, to maybe keep the deal alive. So
Well,
it's
yeah, and
timing is everything.
really quickly, I mean, and I've heard a lot third hand. It was awesome talking to the different people involved, and certainly conversation, I'm sure, played out. But I am still struggling why we need to go through an affordable housing TIF on this, because we could be looking at 50% for 30 years and they would get the 3 points. So I still guess I don't quite understand how that happened, and I'm not sure we need a policy or anything else in place. But my understanding was the developers originally came looking for an affordable housing TIF because that's the way they do business. And then we had suggested, well, wait, we already have a TIF, and I'm not questioning that. I'm just still looking to understand it, because from my standpoint, I think the value of the affordable housing TIF is it gives us an opportunity as a town to really look at our values and our where we're at with affordable housing, and have a larger conversation around what we're doing with affordable housing. And and I've already said it, but I just ended up really confused when this came through economic development TIF, because all I did was look at it on my own. I had not talked to anybody outside at that point. So I still not quite clear why we did that. I guess I don't know how I take Peter's point and put that in, but if we'd had some level of expertise that said, no, it's still better to carve out an affordable housing TIF for them. And I'm not making that judgment. I'm just saying that somebody might have said, these are reasons why you still may carve out an affordable housing TIF for them. I'm just, like you say, it's complex. I'm not sure how to get there, but I am still struggling with that, to some extent.
Yeah, I've accepted full responsibility. I'll continue to. I don't see that there's any advantage. In fact, I would argue there's an advantage to us that the outside limit was 28 years rather than 30 because of the existing TIF and it already running its term. So I'll accept full responsibility. And really, I was thinking from a process point of view, rather having to pull that parcel out of the existing TIF and put it in a new TIF, we have the mechanism in place to do what they're asking.
Right. Yeah. It does have a difference to the taxpayer. If we give them 75% for 20 years, that would be the same. But I think we could give them, I don't know the points in front of me. We could give them 50% for 20 years under, I don't know, never mind. But it's still, to Peter's point, it's complex.
So just a couple, I just want to make a couple comments about this. I think Peter and I think Tom were here. Everybody's got a different learning curve on these things. And I think each time we see a new CEA, new TIFs, we learn something. So we've had, and they're all different shapes and sizes. The down CEA was a big one. Then we had the WEX, the WEX CEA that's still pending. And then we had Bessie Commons in between those two, Bessie Commons 2. And then we now have this little dolphin, Jocelyn Place. So they're all different. It's 2020, hindsight could be 2020. I think we're working hard to try to tighten up the process. The main thing is we got to get at the right answer. I think we're trending the right way on this one. I think the policy will help us do this. Will help us do this. And if we implement everything we've talked about with the policy, it should flag the sort of things we're talking about. So I think these are all valid questions, but I think we, need to, it's a balance. And we're going to constantly struggle with this. Is it the right balance or not? And have we learned soon enough? And I'm sure that some circles are going to say it's never going to be happy with it being soon enough. And I know some developers are going to say it never moving fast enough for us. So I just, we're going to be living in that yin and yang for a while. But I support the comments that were made about, the financial analysis. And I think we're getting smart fast on this. So, but it's a learning curve for everybody, I think.
But Peter, do you feel it rises to the level of putting it in the policy to hire an outside advisor?
I'm not sure. Why don't we table that question until when we circle back on the policy next time?
Sounds good.
John, do you have sorry, John.
Yeah, just some comments and suggestions, I guess. I like this document that's up on the screen right now. And kind of to Betsy's point, I actually would have preferred to see this as an affordable housing district. Not so much for the point aspect, but there's different uses that you can have for the funds, the town funds that are collected for affordable housing. So it opens up some additional ability to increase our capture rate. And this is where the suggestion comes in. I think one thing that we miss a lot is we're not very strategic from the town's perspective in terms of how we approach managing our capture and our different TIFs and CEAs. I think if we added the benefit, like right now we're about 5% probably based on county taxes, revenue sharing, and school funding. About 5% of our captured assessed value or implied taxes that will be collected on that will be returned or saved by the town. I think it would be useful to add a column for those, that state subsidy, and then also maybe a column for the cost to serve. And it doesn't have to be all that detailed. And I think as we mature, when we're looking out 10, 15 years, we might get better view into what the potential upside is to the town in terms of what we can save from the state subsidies by entering and maximizing our capture rate at the right time. So that's, I guess those are two suggestions that I like this document, and maybe even work it back into the policy standard analysis form.
So I think with that discussion, we'll table what Betsy suggested, I think, till our next conversation. But Tom's specific question was, is it okay to proceed with this document, which I think is a 75% at 20 years? Is that?
That's right.
And that was your question, right, Tom? Was whether we're comfortable with proceeding under that assumption?
Yes, we're on a timeline to bring this in first reading next Wednesday. So we need to know how to posture the draft CEA document.
Yeah. So Betsy, John, are you comfortable with the 75% at 20 years?
I
Yeah,
have no reason not to be. Yeah.
right. Out of these three options, with my understanding, what we're saying is this would be what we would consider for voting about.
Yes.
So I think that's a yes, Tom.
Okay, good. Thank you. That's helpful.
Next item on the agenda, which hopefully, I know we're creeping up here. This is another one like the CEA. Tom, this conversation, as you have pointed out, has been around for a while.
I was shocked, Peter, when I looked back at the timeline and how much time passed in between the last time you talked about it. There's all sorts of good reasons why that happened.
Right, absolutely. So I think, Tom, and maybe you gave us quite a bit of materials, including, I think, something Larissa had talked about, which was a very sophisticated model. But Liam, if you maybe could just spool ahead a little bit to some of the exhibits that Tom. So I don't know.
Let me just speak to it quickly. This was the presentation that Larissa and Ruth and I brought forward back in October of 2018. And at that point, we were really at a crossroads. We were talking about all sorts of things forward looking. And this was intended, and it actually served a purpose after about an hour's discussion, to focus attention. And if you're interested at all, have the time, there's about an hour of that meeting that captures all of that conversation. And I found it instructive and helped me remind how that went. So if you have the time and the interest, I encourage you to do it. So the next one, Liam, if you scroll forward, is what we actually brought forward based on the input from that October 18 meeting. So keep going, Liam. And we chose, keep going, we're right out of this presentation. Keep going. So here it is. So right, wrong, or indifferent, because it was a format that we had and that we were all somewhat familiar with, we tried to use and emulate the tax rate comp sheet display approach, if you will. And so the upshot is trying to look at a 3-year outlook. And that's what this does. And honestly, I don't recall that we got much reaction to that. And that's what I might suggest that this committee, where you start, is to give us some feedback, whether confirm that this is the direction you want to go, and ideally give us feedback on the presentation and the display, how it could be most helpful to you. So this attempts, and it does predict everything, including the final mill rate, which is an area that we were kind of very cautious about. I think Peter would confirm that. But this, takes into account all of the school and educational revenues and expenses, capital costs, all of our other associated expenses, including TIF obligations and CE obligations, and even does some valuation estimates into the future, which is really kind of uncomfortable ground for us to be on. But that's really what's required to be in a position of predicting future tax rates.
And a little bit of background, and Don, I think you were involved too. The genesis of this was really trying to get to sort of the point I think John has made several times, is to become a little more strategic, right? Every year we get really pulled into the annual budget, and it's sort of year by year. We haven't really done a good job to look out in time what happens to different things. And what we were trying to develop this for was, we know we have some pretty significant capital outlays coming. At that point in time, it was a community center, it was the public safety building, it was a school. This was really an attempt to try to look at, geez, what do some of these decisions have, and what is sort of the impact? And Tom, I remember you presenting this, and it's not a perfect model by any means. But I think we concluded that this is sort of a format we're used to seeing.
Yep.
It seemed like it was something that it wasn't going to be a herculean effort for staff to put together, but it was kind of a guidepost. And I think we were comfortable that this was generally in the direction we wanted to go.
Then what I'd ask, Liam, if you scroll to the next screen, what this is all the assumptions and kind of the discussion around what's baked into that. And so I would ask, between now and your next meeting, that you all take a moment to look at this and provide some reaction that, have we made the right assumptions? If not, let's talk about how to tweak that. So with that, we can really start to create this consistently time over time.
I think
Don has a question.
Oh, I was just going to make a comment. I like going back to the high level stuff that Larissa had presented. Also, the resource material that she presented in terms of how towns approach this. There's a 4 or 5 year plan that can be undertaken. That's a very ambitious effort. I like really what Tom has done here, which is to try to break it down, build on some things that we've started, try to maybe boil this down a little bit. So maybe it's a 3-year strategic plan where we're updating. Once we do it, we're updating it just one more year every time we go through another budget cycle. And we're relying on other things that are strategic in nature. The comprehensive plan, we have other strategic inputs. We have a capital plan, a long-term capital plan. So I like this approach, and I like kind of using what we have in place and what's familiar and building on that. Thank you.
Yeah, and a great example, we still don't know what the effect of the pandemic is going to have on state revenues and therefore ours. So that is something that never could have been expected, wasn't factored into here. We'll need to modify our assumptions as we know more in the coming months here.
Can we
John,
scroll back?
yeah, John. Oops, sorry.
Go ahead.
I think your format is fine in terms of presenting it as the mill rate calculation. I think that it makes sense. It's what we're used to looking at. One thing, you might reverse it though. Right now you're kind of working towards your mill rate, and I think that's actually what we managed to. That's typically we manage to a 3% increase. So I might look at it as, well, if we do a 3% increase, what does that create for capacity in terms of different years? Can we fit a capital project in here without messing up, having a predictable mill rate? other than that, I thought it was fine. And I think, to Peter's point, I think you want to encourage those discussions at two levels: the big ticket items that are coming down the pike. When might you fit those in or slot them on your plan? And I think each council could kind of decide that, every year or however frequently we do this. And then you have the staff level priorities, the smaller capital items as well. That, could I do? I think we're pretty good at those items today. Those could just flow into the model. Yeah.
Well, and John, I would add the third bucket might be really helpful to model the impact of different labor negotiations we're thinking about now. Those contracts that are multi-years with escalators in them, it could be helpful to see what that takes away in capacity downstream.
Right. Yeah, Peter, I was thinking on the gross, on the municipal gross or or any of, maybe break those down just a little. Employee expense, which would include, salary, wages, benefits, and other the things that are in the budget that doesn't include that, and then an interest expense that would go, because the interest expense gets rolled into the municipal gross each year. And I think those three big buckets, you've got the capital that you're looking at projecting, but then you could model what you're seeing, some of those salary expenses or new positions, things like that. And then obviously the more we go forward, that interest expense, I think.
Betsy, I'm sorry. I don't know if anyone else is having trouble, but you're fading in and out for me.
Oh, okay. Want me to say it again, or
Maybe cut off your video and see if the sound improves.
okay?
Now try it.
And there is an audio, and I can't explain that because there's nobody else in the house. So.
No, that's not helping either, huh?
Yeah, it must be the Wi-Fi going in and out or something.
No,
Wait a
that's
second.
better. Yeah,
We'll probably
that was just
recover.
better. So Tom, on this one, if you're looking for direction, I think this is generally, does this work to try to put together? Is this doable?
No, it is doable. I think we need to go back through and look at the assumptions and tune them up. And I encourage all of you to as well. We don't have all the answers here. We have better information. So inevitably some things have changed here. I was just looking at the mill rate calculations. We did not account for any impact of reval because the actual, tax rates, that 1615 ended up being 1470, and then the next one 1488. So clearly things need to be tuned up here, and we can do that between now and the next time we meet.
Yeah, that's great. And then the other question I have for you, Tom, we'd originally talked. Wow, I'm getting feedback. Can you guys hear me?
Yeah, we can. I hear the feedback too.
We had originally talked about it being a 3 to 5 year projection. Did we talk about, is it just so complex to do 5 that it just isn't meaningful, or is it?
The final direction you gave at about mark an hour and 20, I think, or an hour and 10 rather, on the October of 18 was to focus on 3 years. So that's what we did.
All right.
So Peter, can you hear me now? Is it any better?
Yeah, a little bit. Yeah.
Oh, yeah, what I was requesting was to have the municipal gross and the education gross broken into, instead of one line item, broken into 3 buckets, which would be employee expense, other, and interest expense.
Yeah. Does that work, Tom? Is that doable, or is that?
It's more work. Essentially we're growing the gross by a certain percentage based on historical performance. I suppose we can do that with some further level of detail. What purpose does that serve?
So I think what Peter was mentioning, like if you're going to model out, a labor negotiation, a salary increase or something like that. It just would help to have the line broken out so you could see if the gross is going up by, 10%, is Is it because of an employee expense? Is it because of an interest expense? What's driving that gross? What's driving the increase in the gross?
We certainly do that, obviously, on an annual basis with great clarity and granularity. I think it gets watered down considerably, and I'm not sure what purpose it serves looking out too far in the future. But we can take a look at it.
So like in this example, from 2020 to 2021, there's a little under a $2 million increase in the gross. So if this were an estimate, if this were a projection, I suppose it seems to me we'd spend a fair amount of time asking what's driving that. Maybe I'm wrong. I would wonder, what's driving that, or would we want to model something in the gross that's a driver?
Well, the exercise will certainly take into account things we know coming down the line or in the pipeline. But there's also things that we don't know. And so we're left to assume some things and to model, looking forward. I guess it might be helpful if you could articulate, what the purpose of this is. Is it to forecast future tax rates? Is it to understand, a model where, whether investments are shifting from school to town to capital? I think there's a number of different purposes that can be served here.
Right. I think Peter mentioned one, which was if you're looking at a major new contract, how does that impact capital? If you're targeting a certain mill rate increase, so.
Yeah, I can add to that a little bit. I think I would caution against getting too granular with your multi-year projections, because you're going to spin your wheels for no real benefit. But where this can come in handy is to help guide those negotiations or discussions. If you're looking out 3 years and you're looking at your real growth plus your inflation's 3.5% to 4%, and you have a contract negotiation that is coming up that they're looking for 5 or 6%. Well, something else is going to have to give, right? So in order to hit your numbers going down the pike. So I think this could actually help inform or enable or help those contract negotiations, or maybe put some parameters around them, I guess.
Yeah,
you start those discussions about, well, how are we going to pay for it? And
I guess my suggestion would be, I think at the elementary level, it was meant to be a big picture planning tool. I think the concern was, when we have $100 million school, if that's what it's going to be, and that debt service comes online and we model where that hits. Because I think, Tom, you do model sort of the capital expenditures that we have queued up. It kind of gives us a sense of what's coming down the pike. If we see a real spike one year, we can think about so I think once we get this established, we'll be able to dial into it. I think what Tom's request is, and I guess my question to the finance committee, I know this isn't ready for prime time, but is this worth sharing with the town council at the next meeting? Just saying, hey, this is a draft of what we're thinking. What do you think? Or do you guys want to kind of go one more round? Tom's asked us to he's going to redraft it, it sounds like, or update it, Tom?
Yeah, there's some things that we just know now that we didn't then.
Yeah.
I think it would be probably a mistake to publish something that shows tax rates $2 higher than they actually are. So
I agree.
We got to correct for those known things.
Okay.
But I'm not opposed to, saying it, providing it out to the council and the public, and let's qualify what it is. It's a work in progress, but
or we can wait. We can wait until. So we're going to have one agenda item in September. Maybe we can have a later meeting in late September. Okay. Something that circles back, and we can. Your request was for us to look at some of the other assumptions to see if. One thing we will need to tweak for, which I don't know if is in here. What are the impact of the CEAs by year? That will start to have, especially the Downs one, where there's different escalators in different years the funds come due.
Yeah, you'll see we've grown it, but have we grown it appropriately? It appears to be going up about $50,000 a year. That's probably not accurate.
Okay.
Do you think it would be helpful to provide not just this sheet, but where we are actually, at least for FY 20 and 21, so we can see a comparison of what we assumed
Yeah, that'd be interesting.
compared to what we actually came up with? That might
Yeah.
help make some adjustments to the assumptions.
Yeah, that'd be helpful to look where we're spot on and where we weren't, although it's unusual events, but. Okay.
We'll do that.
Yeah, well, just in terms of quick feedback, yeah, I think it's a really good way to go. I mean, it is something we're all familiar with, and maybe someday we get something a lot more sophisticated, but I think it's good.
Yeah, and the biggest benefit to me anyways, comes from having those conversations about where you're going as a town and what's coming. And so that's a great way to start the conversation.
Yeah.
All right, everybody, there's 2 agenda items left. Let me very quickly, we may not want to discuss them. One is I had put on there COVID funding only to ask, and I don't know what the appetite is. You know, we do have new information. Tom had referenced the school got 2.1 million. Tom, I think you got good news. You think we're going to get an extra 100,000 that you hadn't anticipated from state revenue share?
Yes.
And so the only reason I have this on here, as we look to set the rate, the mill rate, do we want to factor, should we factor any of those? You had said the 2.1 million needs to be used between now and December.
Correct.
Does that impact should it impact our consideration of what our tax request is now that we've got new information? And it's really an open-ended question. I don't know the answer to it, but I think we should at least have that conversation.
Well, in this regard, the only thing that would change and would be the 535,000 that you've included in school operating for COVID-related costs. I'm not in a position to know whether they need some or all of that in light of this access to other funds. But at this point, you've adopted and the voters have validated that budget for the school. So I don't think you can effectively take any of that into consideration in terms of setting the mill rate. What would happen is if some or all of that money is unspent, it becomes fund balance at the end of the year, and we'll find a way to cycle that back through to our benefit. We're going to have a conversation on Monday night about how can the town help support the school in its efforts to move forward on this hybrid plan. And in my mind, I would like the school to recognize that we're doing this, at least in part, to assist them and our families. And I wonder out loud, I guess, whether or not any of our efforts in that regard can be covered by some of these funds. I've asked the general question of the school, and I think they're very, I won't say protective, they just don't know what's ahead of them.
Yeah, that's understandable.
Understandably. So I don't think they're going to be too quick to commit. Having said that, they're very supportive of what we're trying to do because they hear the pain that the hybrid approach presents to the families in town. So this is good news. This is far more money than I ever thought we'd receive, frankly. And I'm not sure what allocation method they used. I think I'm told it was closer to the EPS model, but as a minimal receiver, I'm not sure how that works. But I'm not going to ask questions because the amount of award compared to others does appear to resemble the larger the district, the more the money.
Yeah.
So again, good news, and I know my school colleagues are working furiously to find ways not just to spend this money, but to put this money to use, considering all the restrictions that appear to be coming with it. And there is an FAQ that is attached by a hot link in Kate's memo that you could look on. There's a lot of strings attached to this money. You'll see this hot link at the end here. If you're interested to know more, there's just a lot of regulations that come with it. And so, and the time frame is curious to me, that they've got to flush it through and spend it by the end of December. Seems incredible. But
So Tom, you mentioned there may be some expenses in FY20 that they could practically apply this money to. And so if that was done, and the fund balance they applied to FY21 is greater, they could have the same budget that was approved by the voters, and that could still lower what the taxpayers, the property tax holders need to raise for money. So it's, it seems like there is a component of if this money gets applied to FY20 and that goes in the fund balance and applied to the FY21 school budget, that doesn't change what's being, the budget that was approved. The budget is the budget that was approved by the voters. But if there's more money there, then the mill rate could potentially be lower.
No,
What about-
no, I don't believe it can be for FY21. I think the benefactor would be a large fund balance at the end of FY21, which presumably could help buffer any tax rate increase in FY22, because they could put that money going forward. But I don't know of any legal or effective way to affect the tax rate once the budget's set.
Well, the referendum isn't a tax rate, right? The referendum is the amount of money for the schools. It's a
Yeah.
bottom line of what the schools get. So
Yeah.
the tax rate is a calculation based on revenue and what the budget's going to be. So if that revenue were
No.
to increase,
No.
so
No, Counselor. No, the tax rate is a product of two variables. One, the amount that needs to be raised to support town and school operations. That's the net budget, and the total value of town. And the tax rate's a derivative of those two variables.
Right, but I think the argument I think that could be used is, yeah, voters and we approved a total amount the school was going to spend next year, including the 563, whatever the number was for COVID.
right.
They've got an extra 2.1 million that they hadn't counted on, that the taxpayers are going to. So, I mean, there's some argument, and you're right, there may not be a legal argument, but I thought we had said at the beginning of this that as things came up, we would have, and I don't know if there's an appetite. That's the only, I just think we need to have a conversation at this table about whether there's anything we want to do or not. And I understand it, but I bring it up only in the context of, we already know that they've got 1.5 million in surplus they're already carrying forward. If those numbers hold that we talked about earlier tonight, now an extra 2.1 million, that's a significant, roll forward that they're going to potentially have next year. The wild card is what are they going to spend on COVID, which we don't know.
Right.
If I recall correctly, though, I thought they had a caveat in here. You have to use these funds on something that wasn't budgeted. So for the 535 that we already budgeted for COVID, for the, I think nurses and bus drivers and whatever the other things were.
I didn't catch that.
I think you give it up. If you want to reimburse those, use these funds for that, you don't get the funds. Which is a really strange way to do it. And, but that's the way I read it.
So say that again, John. If they gave up the 536 that's in the budget, then they could use the 2.1 million for that. Is that what you said?
No, well, I think you would lose that funding from the state if you're using it for something you've already budgeted for.
Oh, gotcha. I see what you're saying.
Yeah. Liam, if you just scroll up to the first three bullets on that.
Okay.
So must be used for costs that were previously unbudgeted that were directly caused by the emergency, and that will not be reimbursed by another funding source. So with all due respect, I think we're talking about something that we don't know, we don't nearly have enough answers to.
Right. I think so. I just want to make one point. So, the mill rate is a function of, the budget, which has been approved by the voters. So we can't change that. They get the 54 million regardless, whatever the bottom line came to that, and it's less the revenue. So you had mentioned that they might be able to apply some of these funds to money that they even spent in FY20, which might mean that they could carry forward more revenue for FY21, which would reduce the ask of the taxpayer to, once you take the value. So
No.
we didn't vote on a mill rate. So
No,
the
Counselor,
revenue,
I'm sorry, you're not correct in that.
well, maybe I'm just saying it incorrectly. So, maybe I'm not expressing it correctly, but I think, the question is we did not vote on a mill rate, but the revenue looks like it could be changing here. The revenue that is applying going forward to offset what's needed from the taxpayers.
But you approved a net budget of the school and the town based on expected revenue. And I agree that revenue expectation has changed, but
I see what we're talking about different. I'm talking about the referendum. You're talking about the council vote. The council vote can be redone, is my understanding. The council vote can actually change because the council vote drove the mill rate. What cannot absolutely possibly be changed by law is what the voters approved for the school budget. So I see where we're talking about two different things. I apologize for that, but we're getting close. I think Peter's original question was, we're getting very close to the commitment. The council itself could take up the fact that there may be some additional revenue that could reduce the ask from the taxpayers.
I'm sorry, I don't agree with that statement. No.
Okay, that's fine. We can move on.
I think the school board would have to make that determination, assuming it was all right to do. That wouldn't be a discussion for us in terms of how much they want to turn back
Right.
for fund balance, assuming we can even do that, or they can even do that.
Right. I agree with that. I don't think we could decide that. But if there was literally things that this money was going to disappear. So this isn't my try to grab at the school, but we were just saying there's a lot of money. John was pointing out maybe that if it's already budgeted, they can't even use it. But you had mentioned that there might be things they spent in FY20 that this money could go towards. If that's the case, it's a potential that could be applied to FY21 as revenue, especially if it was just going to go away. So
right. And I'll encourage them to do that, to be as creative as they can.
But probably the best way to handle it at this point is to let it flow into fund balance.
Yeah.
And then, if there's a benefit, recognize it in the following fiscal year.
Correct.
All right. I sense we're running out of steam. The last item was executive department restructure. There was some information, but I think this also will be a town council agenda item for a full discussion. I don't know if there's any appetite for having any conversation tonight about it, or just table it until it becomes an agenda item, I believe. Dawn, right? It's going to be an agenda item for the town council meeting next week.
I don't know if that had been resolved yet. I think there was a placeholder. I don't know if that's been confirmed yet or not.
The draft agenda as it sits, and I think as you all received last night, does include, I believe, the motions that you provided, Peter. Yes.
Yep. So do people want to discuss this tonight, seeing we're running over, or do you want to have that conversation? And Betsy, you wanted to say something?
Yeah, there was just one quick thing where, John had found the blog post, and then Tom had said we can discuss it tonight. So I was just curious how that played in the COVID communication blog. And I think Tom had said in the quick reply that you could explain how that was working, the 3 months of the salary for this position. Sure.
Yeah, I made the decision on my executive department restructuring some weeks back. We were invited to apply for additional funding through this COVID awareness campaign. And so we did put in a second round request. included in that request, I included 3 months of salary and benefits for this new position. We requested about $143,000 in total for all sorts of things. We received notice that we have been awarded $89,000. We don't have clarity as to what was not awarded, and we've been chasing it down, and so I can't report on that. But the savings that have been talked about do not include any of that.
Got it. Okay, thank you.
Yep.
Tom, I guess the only clarifying question I just had on this would be, and Liam, congratulations, by the way.
Oh, yeah.
Thank you.
Awesome.
And doing double duty, 2 hats. Thank you. Tom, the only concern I had is just, just logistically, just as we look ahead, we know that, I mean, Larissa was really engaged. Liam was really engaged. You've now combined those 2 functions into one role and filling it with communications. I'm just concerned, are we going to be able to have the same expertise in,
It depends how demanding the finance committee is. No, in all seriousness, it's a concern of mine as well. I think you will, if you're not already, you'll be impressed with Liam's multifaceted abilities. More importantly, Larissa, among other things, set up systems that will be legacy systems, like the 3-year plan that we just talked about. That's something that thankfully she helped get off the ground, and the rest of us can work from it, going forward. We also had the luxury of almost a month of crossover. Liam and Larissa worked very, very closely on a number of things, including the dashboard. So I think there's good continuity, and we have systems in place that that we intend to continue providing the same level of service to.
Yeah, so is there any expectation that in the next budget cycle, you're going to need to have to backfill staff in either one of the areas? So
Not at this point, no.
Right.
Looking forward, we do anticipate some changes in the finance office, just with some retirements, and so I think there's future opportunity for us, and we'll be mindful of what our needs are, and we'll be looking to skill sets to see if that can help be supported as well. I see Ruth looking intently at the screen.
All right. Anybody else?
I would just add to that. I mean, I think the executive department is Tom's to manage. Actually, many of the departments are, but the budget is his to manage. And the decisions that he made here, I fully support. I think they're forward looking. Larissa was able to bring a core set of skills to the table and move us forward in a number of different areas. And I'm sure Leah is going to help us progress forward in some similar, but some other areas as well in his new role. And hopefully this communications coordinator can help fill a void that exists. So I think good job. The fact that you can do it and save money, work within your budget is fantastic.
Yeah, I just think bringing it forward and having the discussion, makes it just an even stronger thing. I do think, there's, I think it all evens out. But there certainly is always going to be a perception in town, if there's a brand new position being created. Well, what's that? Well, why would it be now? And some of the harshest economic times we're seeing. So I think it's a very good discussion to have. And I think we're doing the right thing by, analyzing it and discussing it. And I applaud the, Tom's, forward thinking of relooking at positions.
So with that, Liam, do we have any pressing questions or anybody interested that's hung with us for the 2.5 hours?
We have no attendees. We're all panelists this evening.
Let's just check to make.
No Q&A either.
Okay.
Oh, there's one chat. What's that?
Unless, yeah, there's
Hello.
one chat.
Okay.
Liam, can you stop sharing screen so we can see? Thank you.
So yeah, there's one chat. Did someone check that? Is anything?
As Dawn saying hello.
Hello, Don.
Yeah.
So with that, if anybody doesn't have anything else, is anybody interested in a motion to adjourn?
So moved.
Second.
All right, all those in favor? I guess we can raise our hands. Looks like I can't see something, but thank you everybody for all the work that went into this. A lot of information, covered a lot of stuff tonight. So thank you very much.
Yes.
And
Great work. Thank you so much.
all right, thanks everyone.